Hello, everybody, and welcome again. It's our weekly check-in with a weekly Q&A with my good friend and CEO and founder of Vanreusel Ventures. We've had some great questions come in, and it's great to get stuck into those. It's great to see you, James, and I know that this will be another challenging question for you. We've had a question come in from Miguel in your home state of California. Now, Miguel, I think, is coming from a sales perspective, and his question is, what are the critical components that would make a CFO decide to change vendors, specifically IT? So can you help Miguel with that question?
Yeah, I mean, that's a great question. I think, I get a lot of emails from IT vendors. Just, I think they're trying to figure out whether the company's ready to switch to either an upgraded IT software or just want to change vendors. I think there are different metrics. I would say typically we're all super busy, so changing vendor is not something you really want to do unless there is a big benefit, because there are always switching costs. Even if it's easy to switch vendors, people still need to understand how to use it, how to use the software, so that maybe they have to get trained. So changing doesn't get done lightly. But every year we still have to upgrade things. So I think different factors are: one, if the company is growing significantly and you want to just meet your targets. I think in a previous episode we talked about pain. When does the pain get too big for a company? And I think as an IT salesman, you can really look at what are some of the thresholds of companies. For instance, for accounting software, you find out they're using QuickBooks, but at 20 million in revenues is a typical point in time when they switch to NetSuite or Sage Intacct or a different accounting software, kind of the next step up. And so I think that's when I typically get emails coming in, because the vendors know this. So there's the pain, there's the need, there's also a typical ROI where you might be getting overstaffed because you're using software that's not powerful enough. And I think those are really the main things. So an IT vendor should really look at the turnover of the company, the size of the finance and accounting function as well, how many FTEs there are, and really the growth rates as well. Where are they going to go? And then I think another thing to look at is, and you can do this on Crunchbase, PitchBook, CV Insights. When was the last time this company raised capital? Because before they raise capital, they just want to extend the runway. They really don't want to make any big investments. But as soon as they raise capital and they have extra cash, that's when they may have been pushing out some purchases, and so that's really when you could see new software being purchased. So those are probably some of the trigger points.
I expected as a good CFO there, James, to say, when it's cheaper. It's all about price, but it's not all about price, is it?
Yeah.
As you said. You said.
Yeah. I mean, the other thing, the other thing to look at as well is, it really depends how the salesperson is going to get paid. Is the time of year, right? Because going towards the end of the quarter, you can get some bigger discounts. Going towards the software vendors' year end, to hit those numbers, you might get an even bigger discount. So I would say typically CFOs know this, and salespeople know that CFOs know this. So they'll just, they can play the game together and see what magic can happen.
Indeed. I think when you any decision to change vendors, as you said, it's never simple. It's never straightforward. It's going to cost you. It's the invisible cost of the downtime, and all the transition, the hassle, and learning something new. The change management in the organization as well, getting people to get on board with that. there's always hidden costs, James, isn't there?
Yeah. Absolutely. You run a software company, so you know the sales process as well, and some of the issues that your clients are coming back to you with.
Yeah. My clients don't get any downtime, James, or anything like that. It's simple. It's simple. Yeah. But I funny enough, Jen, I was gonna say, finish off really, again, it's, if you've got an existing vendor, and you're thinking of changing, why? What's the matter with the relationship? Why do you need to do it? And I think if you've got a strong enough why, a compelling enough reason to do it, and it makes financial sense, as you said, a return on investment, and there's a hunger to change. James, as always, thank you for your time. If anybody's got any questions on this or any other, obviously matter that you can help with, you're always available, I believe, and they can get in touch with you. Normal channels, website, social media, and even direct email. Yeah, James@vanreuselventures.com.
Yep, I will respond.
Great stuff. Thank you, James.
Thanks, Steve.